Hi guys, welcome to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague Santo joining me this afternoon instead of Yatin. Santo, it was a pretty much range-bound session. When you look at the markets, although at the start it looked like we could be knocking at that 19,900 mark, but we fizzled out towards the midpoint of the day. And since then, we have been pretty much range-bound, but we did manage to defend that 19,800 mark. Santo, it being a weekly expiry, day, we did see some bit of volatility, but we managed to hold on to the 19,800 mark. Santo, any observations that you made, regarding the trend in the market today?
I think you're looking at the wrong index, Nandita. Right now, where all the action is happening is largely in either in the SME space or in the IPO space.
Right.
I think that is what has captured public imagination at this point. And this phase vaguely reminds me of the one we had seen in 2017-18 when mid and small cap stocks were on fire. Of course, last few days we've seen some bit of profit taking in mid caps, but on the small cap and micro cap space, I think that is where all the action is happening. We are seeing unprecedented retail interest, and it is slowly rising to a level which really calls for some kind of concerns, because there was concerns about valuations even earlier, and with prices continuously going one way up, and also the liquidity in many of the stocks being on the lower side, should the tide change, then a lot of people could be in trouble.
But Santo, of course, we have 5 new IPOs that are open for subscription, right? Tata Tech, of course, there's so much interest around that. So a lot of liquidity is moving towards IPOs, as you mentioned. And Tata Tech, of course, it has garnered subscription of over 9 times the shares on offer, and we have one more day to go, right? 24th November is when the IPO closes for subscription. So we'll have to see how much more interest it sees. Of course, the listing could be sometime next week. We'll be watching out for that. And the grey market premium is hinting at a premium of 70 to 80% of of the upper band of the IPO price, right? But talking about some of the individual movers, I want to point out that today pharma pack came under a fair bit of pressure. The pharma pack as a whole has seen good buying interest over the last few sessions. We've seen the pharma pack rally somewhere around 4 to 5% or thereabouts. But today, of course, Cipla was the big laggard. Given the fact that a few days ago its Pithampur unit in MP had received a warning letter from the US FDA, and at that point of time, both Yatin and me, we were quite surprised because there wasn't any reaction on the stock, so to say. But today, of course, CNBC TV18 accessed the contents of the letter. Earlier the company had maintained that it was a routine, manufacturing practices, observation that the USFDA had issued. But now, of course, it has come to the fore that USFDA has, in fact, flagged manufacturing lapses at the unit, wherein data integrity issues are there. There are complaints regarding the product as well, and there are some concerns over microbial contamination as well. So that has, of course, impacted sentiment, and we've seen a 7 to 8% kind of a fall coming in on shares of Cipla, which has, I think, seen its biggest fall in 9 months.
Well, Nandita, also partly I think it could maybe to some extent have to do with the fact that a lot of positions had got built in Cipla. There was some chatter, also anticipation that the promoters may sell their stake. Now, in a recent interview to CNBC TV18 itself, the company has denied that. So I think both of this have come together almost, the events have kind of overlap. You first had the denial of the stake sale. Now you have this. So I think some of the speculative positions that had been built up, probably those are getting unwound. To some extent, that could be adding to the pressure on the stock at this point, because pharma companies, if you notice, they keep getting these strikes from USFDA from time to time, and this we've not seen such a steep fall so far. So I think it could be a combination of factors.
Yeah, also the Goa unit has also got a warning letter, and the same issues may have been flagged off for the Goa unit as well. So that could be another dampener where the stock is concerned. But aside of that, what did well today was the entire two-wheeler pack. We saw Hero MotoCorp hit a fresh 52-week high. We saw Bajaj Auto, Eicher Motors, BPCL. Eicher Motors. These were some of the two-wheelers that did well. But aside of that, you had the likes of BPCL, HPCL also do well in trade today, and IndusInd Bank as well. Yesterday it was under pressure. Today it has managed to make a fairly good comeback. But aside of that, anything that you're spotting in the mid-cap end of the markets by way of stock movement, anything which saw, a very good up move, aside of course, Honasa Consumer, the parent company of Mamaearth, that rallied 20% on the back of good earnings. We'll be talking about that in a bit of more details when we talk about the stocks on our radar. But anything that is catching your attention or catching your fancy in the mid-cap end of the market right now?
Aditya Birla Fashion Retail, that I think saw some the big sharp move today. Although there's been one of the laggards in the retail space, but this has seen some interest. We've seen Industries, which has done fairly well, up 3%. Then we've seen Navin Florin also up close to about 3%. Now, interestingly, in the case of refrigerant gases, MK came out with a report today. So they've said that the picture overall in the refrigerant gas scene has changed a bit with the with one of the big players in UAE. They have stepped up their imports to US.
Okay.
So that is probably making things a little tough for Indian companies in general. So Indian companies will now have to focus more on the domestic as well as the Middle East market. So despite that, we are seeing a good rally in Navin Florin today. Now the stock has taken a beating of late following the exodus of some of its senior talent, and that's dampened sentiment. So maybe we are seeing some kind of short covering. That could be what is leading to the rally in the stock. It's gone up by close to about 10% over the last few trading sessions.
Right, I think so that's one pocket to watch out for, of course. But let's talk about all the stocks that are on our radar this afternoon. I'll start with Bajaj Auto. As I mentioned, the stock has hit a fresh 52-week high. It's on the verge of clocking that 6,000 rupee mark for the first time ever. Morgan Stanley in fact came out with a very bullish report. It has pegged the target at over 6,200 rupees per share. That's a lofty 6,000 rupee plus target. I think it's the second brokerage that has pegged the target above 6,000 rupees. And of course, there are quite a few factors behind this rally, given the fact that there is some bit of recovery in the rural markets as well. That could bode well for some of these two-wheeler makers, which is why I think Hero Moto, even Bajaj Auto, as I mentioned, witnessing good buying interest, because these are early signs of demand recovery, and if that kind of picks up pace, we could see more buying interest around these two-wheeler shares, right? And yesterday, Bajaj Auto's management was on CNBC TV 18, where he highlighted the fact that there could be some more product launches lined up next month itself. And if you look at the Triumph premium bike that they had launched in competition with Enfield, well, Triumph sales are doing pretty well, and Morgan Stanley has also pointed out that it's being scaled up well, and Rajiv Bajaj has said that they are looking to double the production as well as sales of Triumph going forward. Right now it's somewhere around 8,000 or thereabouts. They are intending to sell 10,000 units per month, and they are eventually looking to scale up to 18,000 units. So that's one positive. Aside of that, if you talk about Chetak, it has come back in an EV format, right? And that's also scaling up well. And the company is also planning to launch the first, CNG two-wheeler by 2025. And Rajiv Bajaj claims that, right now there is no company which is producing CNG two-wheelers. So this will be the first company to do so. And they aim to do so by 2025. Of course, there is no denying the fact that the stock has rallied 65% on a YTD basis. So, if you look at the internals, it could be a little expensive, compared to other two-wheeler makers. But I think once the recovery in rural markets really play out, that could be one catalyst for Bajaj Auto, and it could, lead to more upside on the stock. Also, the fact that, exports, they were, they had seen a setback when that whole Nigerian currency devaluation had happened. But now, both the company as well as brokerages are expecting gradual recovery in exports. So worst may be over when it comes to the export market as well.
And interestingly, Nandita, the stock has done well despite the fact that rural recovery has been very slow in
coming. It has been slow.
They've been waiting for it for a long time, but despite that, good interest in the stock. And that is, I think, sometimes what happens when there is too much pessimism on a stock, and those are the stocks which tend to do better than what most people expect. Well, Tata Steel is a stock on my radar. Now, stock closed flat today, but it's been steadily inching up over the last few trading sessions. It has risen close to about 10%, but steel still is not a very hot story, and the reason for that is we're still not seeing any real strength in the Chinese economy, and China is one of the big consumers of steel. So that is one of the reasons why steel stocks in India too have been moving within a narrow range, and The other reason, according to CLSA, is that now Chinese steel spreads, they have now corrected to about $100 per ton, and this is the lowest in at least the last 15 years. And CLSA has also highlighted the fact that Indian prices right now trading at a slight premium to
Asian countries.
yeah, so that is again one of the negatives for Indian steel companies, and this does not look sustainable over a longer term period. So, and besides the fact that you've got a lot of capacity additions coming up over the next 2 to 3 years, so the outlook for steel, which was quite buoyant at the start of the year, mainly on hopes that China's economy would gather steam. That has not played out, and now you have all the other negatives coming in, which is that there will be a lot of capacity addition, and at the same time, Indian steel prices being at a premium to some of its regional neighbors.
Right, I don't remember, I don't which brokerage, but a couple of days ago I had read a brokerage report where they had said that Tata Steel's margins could improve in the coming quarter, and even the European operations are expected to cut down their losses. I think at least by the fourth quarter of the current fiscal. So, I mean, brokerages are largely positive on Tata Steel at the current juncture.
Yeah, they are. I mean, there's no sell call on the stock. Most of the negatives have been already they are reflecting in the stock prices. But what I think the analysts are also saying is that we don't see any major triggers at this point in time. Something can dramatically change the outlook for steel in general.
Right, that was about Tata Steel, but of course, that the stock that was in focus today, Honasa Consumer, which is the parent company of Mamaearth, 20% rally. And you remember the pessimism around the stock, or I don't think pessimism is the right word. I mean, the cautionary notes
right.
that
It
were
was pessimism. Actually, the valuation was something that was being
a lot of concerns
flagged.
around valuation, right? Because the one thing that the company has not been able to do is crack the code of brand loyalty. It has been around for 7 years, but it hasn't really been able to inculcate loyal customers, so to say. But if you look at the second quarter performance, it has been pretty robust. Profits have nearly doubled, steady margin expansion, and operationally the quarter is pretty strong. And advertisement expenses are also expected to go down. That's what the management has maintained. In fact, we had the management on Moneycontrol today itself, and they were pointing out the fact that they are aiming to sustain that over 30% growth in the second half of the current fiscal as well. If I have to remind you, the stock started going up once Jeffries came out with a positive report. It has got a vote of confidence from Jeffries, which has a buy rating. A target price was somewhere around 520 at that point of time, which I think which was implying a 50 to 60% kind of an upside from the listing price. But today again they have hiked the target price by 10 rupees, and they expect the stock to do very well going on the fact that the new brands that they have launched are scaling up well. In fact, they have also revised the EPS estimates upwards by 5 to 6%. Now, already the stock was on an upward trajectory, right after the report came out, and today once again we saw the stock going up and hitting a 20% upper circuit. I was talking to Kranti Bathini of Wealth Mill Securities in the morning, and I asked him, like, is the valuation concern overdone, or is the worst over for the stock, or should the tide turn in favor of or sentiment turn in favor of this particular company? He said that of course there is so much focus on personal care in the country right now, so this company could come up and catch up with its peers as well, but if you are an investor with a high risk appetite, it makes sense to buy into the stock, but on dips, not at the current juncture, only for the long term. But he's also, he was also sounding cautionary, and he's cautious rather, and he said that it's not prudent to jump in at the current juncture. Just wait it out, see how things go, because of course, I was reading the short call note that you write, in the morning, and you mentioned how Zomato as well, when it listed, there was, we saw a very sharp downtick on the stock, but it did manage to stage a very good comeback. And let's not forget Dipinder Goyal, who's the founder of Zomato, also has got allotment in the Mamaearth IPO, right? So he also owns some bit of stake in the company. So who knows, the fortune rather may have already turned, or it could turn pretty much.
Well, these numbers are also a bit of a surprise because if you look at Nykaa, after the listing, the first set of numbers that came back were disappointing, and there have been a lot of comparisons of Honasa with Nykaa. So to that extent, these numbers have come as a bit of a surprise. But let's see whether the stock price can
Yeah.
sustain, if it is just short
Sustain or
covering of
not? Yeah, that's
positions.
correct. Yeah.
Well, the last stock on my watch list for the day is HPCL.
Hmm.
Big jump in the stock, up about close to 7%. Now, the obvious reason is that crude oil prices are falling. Now, when crude oil prices fall, that is positive
Yeah.
for an oil marketing company like HPCL. My only concern, though, Nandita, is that we've got elections coming up.
Yeah.
And while we have seen a decline in crude prices, there's still the outlook on crude. If you look at analyst notes, it's pretty much divided. We still don't know which way the conflict in Middle East is going to play out. So for now, yes, crude oil prices have slipped, but then we have seen that earlier during the year also when they had slipped and then dramatically rebounded. So that's a bit of I would say crude prices are still very hard to predict at this point in time. Besides that, the one thing in favor of HPCL is clearly is the valuations. Now, ICICI Securities recently came out with a buy report on the stock. They have set a target of 365 rupees. They said that at 2.5 times FI estimated FY25 earnings, there's very little risk. Also, price to book is less than one based on FY25 book value. So clearly, a lot of things, valuations are very clearly supportive. But if prices were to go up and you have the elections coming, oil marketing companies have very little freedom
Yeah, to tinker with
to
the
hike the
things.
prices. So
Yeah.
that is one of the things that many analysts have been cautioning against, but still the stocks have managed to do pretty
Do
well.
pretty well.
Well, you've seen an improvement in the operating numbers also. Sequentially, there was a bit of a decline,
Yeah.
but company has managed to lower its borrowings, gross debt, that is, and clearly year on year also the company has turned corners.
Right, I think we'll also need to keep a watch out for the OPEC Plus meeting that has been delayed to next Thursday. It was earlier supposed to happen this Sunday. It's been delayed, and expectations are that, of course, Saudi and other OPEC nations will, kind of look to extend the production cuts to keep prices elevated because prices, have come down at least 20% from September, right? So they will look to keep prices elevated. So we'll have to keep a watch out for that as well. But I think with that, we've covered most of the stocks that were on our radar. If you have any comments to make, leave it in the comment section below and we'll take note of them. But I think we are done with this edition of Closing Bell from me and the entire team and from Santo. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and all.